What the hell is a mezzanine? If you look it up, a mezzanine is like a balcony within a space. You can Google it right now. You'll find all these pictures that pretty much look like a balcony, but they are interior. So, in essence, it's like additional or backup space. And speaking of backup space, mezzanine debt is like a backup loan that comes after the main mortgage on a property. In a past episode, I talked about secondary financing, and I'll add that episode to the show notes here for you guys. To recap, these are called second because they come after the primary mortgage in terms of the repayment priority. These could be secondary mortgages from another bank, the same bank, or from a seller when you're purchasing a property who's willing to carry a loan balance to you. Keep in mind that many lenders don't prefer secondary mortgages for a lot of reasons, because firstly, it increases the risk for the first position lender, especially when the borrower's leverage is increased. What's more is that it gets even hairier if there's a foreclosure. That's why most mortgages won't allow for this type of secondary funding, but a lot of times there are exceptions for mezzanine debt. Here's the kicker. With mezz debt, the lender also becomes a part owner of the property. This shared ownership actually helps protect the lender's investment. Typically, mezzanine debt comes with a higher interest rate, somewhere around 15%. And to you, that might sound steep, but since mezz debt usually makes up only about 10 to 15 of the total financing package, because you've already gotten a good chunk of the loan from the bank, the overall cost of this remains manageable. And you're probably wondering who provides mezzanine debt. Usually, private debt fund lenders are the go-to for mezzanine debt, and they practically specialize in this kind of financing because they understand all the complexities that are involved. Here's an example for you. Imagine you want to buy a luxury hotel, and the luxury hotel is, call it $10 million, but you're short on capital. You're able to secure financing from a traditional bank, and the bank is going to give you $6 million, but now you're short $4 million. And you're wondering, where the hell am I going to get $4 million? Not under your mattress, I'll tell you. So this is where mezzanine debt will come into play. You're going to find an investor who's willing to provide that $4 million. Let's say they have a large checkbook and they can write that $4 million pretty easily. So they're willing to invest that $4 million. In return, they're not just going to charge you interest, but they're also wanting a share of the ownership of the hotel because they know it's going to be a badass investment with badass returns. So those are their terms. Now, they're going to earn interest on their investment, which let's say in this case it's 15%, and they're also going to get 15% of the ownership of the investment or the property, which is the hotel. So if they're getting a 15% ownership, they're also getting a 15% interest rate on that $4 million, which is going to come out to roughly $50,000 a month. So let's fast forward a little bit. Now, let's say 2 years down the road, it's booming. Now your hotel is actually worth $12 million, and you want to sell it for that $12 million to get your money out of it, which means you're going to profit $2 million. Because your investor or mezzanine debt investor owns 15% of the property, they're going to get 15% of the profit. So since the total profit in the property is $2 million, that means they're going to get $300,000 after you sell the property, and the rest goes to you. So mezzanine debt not only helps you secure the property, but it also aligns the interests of both parties, being you and the investor. So it makes it a win-win situation. And that's all I have for you on mezzanine debt. Remember, it can be a super powerful tool in real estate financing. It's a pretty much another creative way to get things done. Whether you're eyeing a luxurious hotel or some cool-ass commercial project, this can offer the flexibility and access to capital that traditional banks are probably not going to offer you. And once again, I love the creativity piece of it. So I'll see you guys again next week. Wonton out.